Today, we'll talk about smart money trading setups. I'll show you two different simple trading setups. These are fine and easy to use smart money trading concepts which I use myself regularly. Once you use them, it will get easier and easier. It consists of order flow and structures, ranges, imbalances, and the liquidity. I love this trading style for scalping and day trading. We have so much to do. If you're ready, let's start. Today, we'll cover smart money trading. Nice and cool strategy for beginner traders. Welcome our free trading course all about price action trading strategies and smart money concepts. If you are looking for a structured table of contents, I set it up for you. You can find it on Google Drive or directly from my website, which is in the description. And please try to watch videos in order, otherwise it can be really confusing. Let's talk about the first smart money trading setup. This is an extremely simple idea that you already know actually, but it works great. This is a high win rate setup that can be used with all types of asset classes. When the price in a bullish order flow, it will create new break-off structures and natural premium and discount areas each time. Inside these big structure legs, there will be microstructures that price makes shifts. You may ask, which zone it will react to. First of all, no one knows that for 100%. We'll confirm the reaction once the price comes to these reaction zones. Then we analyze the price again. One of the best ways to confirm an entry is seeing a structural shift in these areas. Price could get a bit tricky at the time, but it generally leaves inducement and imbalance in the area. It will be very strong and significant signs for entries. Let's see some examples to understand better. When we look at this chart at 4 hours time frame, you can already see the overall bullish flow. Forex, crypto, stocks, indices, it does not matter. All the same rules apply. Price creates a new break-off structure to confirm its bullishness. After each break-off structures, it also creates natural premium and discount zones. Premium and discount zones are the first important tool to identify possible entry areas. I want you to notice these two imbalance areas and how the price reacts to them. We are looking for more bullish setups since we are in the discount zones. Now, of course, you may ask this, but there are other imbalances here. Which imbalance will work? How to know this? In my opinion, any imbalance may work and may not work. We do not know this until the price reaches the imbalance and show a kind of resistance in the area. The best way to analyze this is to enter lower time frames and make a further analysis if the price is willing to react or not. Let's check the latest price action and imbalance reaction on this area. Let's analyze this chart step by step in the 15-minute time frame. Price taps the 4-hour imbalance and creates a swing failure pattern. My first line of confirmation is a swing failure pattern with a big and strong wick. Later on makes a very strong break, not an ordinary break, huge displacement. A powerful big candlestick with a significantly large imbalance behind. Later on, price starts to build inducement area, a very obvious liquidity pool right on top of the imbalance. As you know, I love the mixture of imbalance and liquidity. For targets and for entries, I use them for both. Then the next question appears in my mind. If the price reacts here, where could it go? Is there any reason to go up or down? These significant equal highs are obvious, my first target. And a swing high for the possible runner. But in this chart, my main aim is the equal highs. Now, how to enter to this trading setup? I used 4-hour time frame as my main high time frame. For this 15-minute time frame, I can consider this as a mid or low time frame. Let's assume this is a mid time frame entry. If I had to make an entry here, it would be like this. Significant caution stop loss to hold my position with two main targets. This would be my mid time frame entry setup with a managed risk. But let's dive into even lower time frames at this point and see can we make a better entry. Now in this chart, seeing these equal lows make the trade immediately a low probability entry for me. Trading against an equal low or high always carries a risk. But you can see this, a nice break here, with imbalance combined with a breaker block. My first assumption would be setting an order inside the breaker block and the imbalance combo. For this trade, I would set my stop loss somewhere between imbalance and equal lows below. My risk probably would be 0.5R or 0.25R due to that equal lows. Look guys, my money is very important. I would not want to lose it easily. I would rather manage the risk. However, there is no pullback here as you can see. I could have missed this entry. This is just the reality of trading. Another trade setup I use so much is this. Again with a bullish order flow, seeing a long range. I love range trading. You can trade inside the range as well as outside the range. Range trading methods are limitless. Once the range is formed, you should be watching liquidity around it. They are very prone to being hunted. Let's see an example of it. Checking the Ethereum chart within the 4-hour time frame, you can easily identify the range and the very obvious liquidity formed below. If you look on the left side, you'll also notice the imbalance combined with it. At the top, another set of liquidity is forming a potential target. And this giant imbalance. So all of these give me target ideas about where the price may go after the reaction. This could have been a high time frame entry. My stop loss would be below the imbalance candlestick. Why? Because I need to cushion the possible pullbacks. There's a large imbalance that has not been fully filled yet. Even though this is a high time frame setup, it is a very great setup that works very well. I would risk my natural size. However, let's dive into checking out how to make lower time frame entries with more confirmations. Let's see. You can see the first imbalance tap right at this point, which also makes a swing failure pattern. Later on, market structure break. Now this is a weak break, not the best in the world, but still in the category of structure breaks. It also has this significant imbalance here, with mini support and resistance flip area which I enjoy trading. I could have taken a trade like this one, but it would be a loss. Now people and other mentors can give me 1,000 different reasons not to enter such a trade. But I have been in the finance, trading and investing business for 10 years. Perfection does not exist. We only manage risks. As long as I manage my risk, I can enter any trade that I want. Let's check another possible entry. Price makes a small consolidation over imbalance area. Basically the accumulation phase of power of 3. Then hunts the liquidity below and creates the manipulation phase. In the manipulation phase makes a tiny swing failure pattern. It also creates the tiny break with an imbalance behind. Unless you have an order set to this imbalance, it could be hard to catch. So, this would be an ideal entry. It also completes the expansion phase. Accumulation, manipulation, and the expansion. It also reminds me of the wake-up trading method. But it is for another video. Okay folks, I tried to teach you little secrets and details of smart money trading. This is a very common trading strategy in the trading world, so you can use it in your trading life as a day trader or even scalper. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.